Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. We're excited today to discuss how to upgrade a human interest solo 401k to allow 2025 Mega Backdoor Roth solo 401k contributions. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So, as always, if you have questions or topics that you wish to discuss, please chat that over now so that we can be sure to get to them all. We want to use this time to answer your questions and topics, as well as go over the content that we're here to share. Again, this is another session of the My Solo 401k Financial Daily Q&A webinar. This is our second session of the day. If you subscribe to our channels, whether you're on LinkedIn, X, Instagram, YouTube, you'll get notifications of when we go live. You can come and hear the content that we're here to share or ask questions. In addition, if this information ends up being helpful to you, please like this video as it'll help us to get the word out to other solopreneurs like yourself, other advisors who may be looking to secure their retirement future. Okay, wonderful. So again, here today to focus on how to upgrade a human interest solo 401k to allow 2025 Mega Backdoor Roth solo 401k contributions. So as always, the foundation is eligibility. So in order to be eligible to set up a solo 401k, you have to be self-employed with no non-owner, non-spouse, full-time W-2 employees. So you can operate your business as a sole proprietor or a single member LLC. You could operate your business as an S Corp or a C Corp or even a partnership and be eligible to set up a solo 401k. The key is that you're reporting that earned self-employment income. And again, that it's an owner-only business. So there are no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Now, we're assuming for this discussion that you already have a solo 401k, but it's a solo 401k at human interest, or the same concept also applies even if you have a solo 401k somewhere else, such as at Fidelity or Schwab, Vanguard, just to name a few. And so the concept is that you could upgrade that solo 401k that you already have to a solo 401k plan provided by my solo 401k Financial and take advantage of the advanced services and features of our solo 401k plan. Specifically, one of the most popular features for our client base is the ability to make mega backdoor Roth solo 401k contributions. So the reason to upgrade is because of the limitations of the basic plan. So for example, the human interest solo 401k plan, and this also applies again to the other plans that I mentioned, like Fidelity, Schwab, just to name a couple, do not support, they do not allow for making mega backdoor Roth solo 401k contributions. So under the rules, you can adopt a solo 401k plan that allows for mega backdoor Roth solo 401k contributions, but your plan documents also have to allow it. And human interest, based on client feedback, based on those that have already upgraded their plan to our plan, their plan simply just does not allow for mega backdoor Roth solo 401k contributions. But in addition, there are other services and features that you can take advantage of with our plan, like the ability to invest in alternative investments, the ability to take a solo 401k loan, the ability to claim $1,500 in solo 401k tax credits. So all of that is available for somebody who already has a basic plan somewhere else. You can upgrade your plan and access those advanced features. You can upgrade your plan and qualify for the tax credits, because those tax credits are not just limited to new plans. Even basic plans that are upgraded to include the required features, which we automatically draft the plan to do that, those businesses as well would be eligible to claim $1,500 in tax credits. That's $500 per year for 3 consecutive years. So the process to upgrade is referred to as a restatement. So it's not as if you are shutting down your existing solo 401k at human interest and starting up a whole new plan. No, the plan will continue, but now it'll be governed by our IRS approved solo 401k plan documents. And those documents are the key. That's what gives you access to the advanced features like the mega backdoor Roth solo 401k contributions. Now, we are neutral as far as where the accounts are opened up at. In other words, we're the plan provider, meaning the document provider. And our plan is totally portable. So as long as the institution that you want to open up the accounts at will open up accounts for a third-party plan like Fidelity, Schwab, those are the top two brokerage options, then you can most certainly have your accounts there. Now, human interest, they will not open up accounts for people that bring their own plan documents. So if you've got a human interest solo 401k plan, your plan documents can be updated to our plan. So you could think of it as a cut and paste. So cut out those documents, replace them with our documents. Now you've got access to the mega backdoor Roth, the tax credits, the loans, the investment, the alternative investment option to invest in those types of investments. But you'll also need new accounts because those existing accounts, those pre-existing accounts that you have for your solo 401k through human interest, those are, from human interest's perspective, are governed by their plan documents, which you no longer are using their plan documents. Now you're using my solo 401k financials plan documents. So you'll need new accounts for the restated plan. And we help you open up new accounts at the bank or brokerage of choice. As I mentioned, Fidelity, Schwab, those are the top brokerage options, but you're not limited to those places, right? We're neutral. We've helped customers open up accounts at hundreds of different banks, credit unions, and brokerages like Fidelity and Schwab. Now, if you want to make mega backdoor Roth solo 401k contributions, you'll need different sub accounts for the different contribution types. So for example, when you make a mega backdoor Roth solo 401k contribution, it's a two-step process. You first make a voluntary after-tax contribution to a separate voluntary after-tax account. That's what gives you access to the higher contribution limits, because those after-tax contribution limits, for example, are much higher than the Roth IRA contributions limits. For example, 10 times higher for 2025 and multiple times higher than even the Roth 401k contribution limits. So you've got to have those after-tax funds go into a separate after-tax account before they're moved over to the Roth solo 401k. So it's a two-step process. Now you want to get it into the Roth solo 401k, or you could send it to a Roth IRA, but just like any Roth account, all the subsequent gains, all the future gains have that tax-free growth potential. Now, if you already have a solo 401k at human interest, again, new accounts will need to be open, not at human interest, because they don't support accounts for people that bring their own third-party plan documents. But we'll help you open up new accounts at the bank or brokerage of choice. We'll then help you transfer over those pre-existing accounts at human interest over to the new accounts. Now that transfer, that's not taxable. That's not reportable, because really it's just going from one account for your solo 401k to a new account for the restated plan document. So it's not as if the funds are leaving the solo 401k. So it's not reportable, it's not taxable. Now, what are those 2025 mega backdoor Roth contribution limits? And how could you still make 2025 mega backdoor Roth contributions? Well, the solo 401k rules are much more flexible in terms of the contribution deadlines as compared to a 401k plan that you might have at a day job. So for a 401k plan that you might have at a day job, you've got to make your employee contribution by the end of the year for it to count for that year. But the rules are different for solo 401ks because those solo 401k plans are for self-employed individuals. Many self-employed individuals don't know how much they've made until maybe after the end of the year. They might have a seasonal business where they're working all the way up to the end of the year. And of course, your ability to contribute is based off of your earned self-employment income. So you need to know how much you work, how much you earned, excuse me, in order to determine how much you can contribute, right? You can't save more than you earned. So the rules give that solopreneur, that self-employed person, more time to determine how much they're going to contribute and then actually make the contribution as long as they establish the plan on or before December 31st of 2025. So here we're assuming that the individual already has a solo 401k of human interest that they established before the end of 2025. So they met the 2025 deadline. So from a solo 401k perspective, that means that they can contribute all types of contributions for 2025 by their business tax return deadline, including any timely filed extension. Now, if they set up a basic solo 401k of human interest, say in 2025, that would have met the deadline, but they don't have the documents that allow for the mega backdoor Roth contributions. Because again, you need to have the documents that allow for both steps. You need to have the documents that allow for the voluntary after-tax contribution and then the transfer of the voluntary after-tax solo 401k funds to a Roth account. So of course, our documents automatically support the mega. So you could upgrade your basic solo 401k at human interest, the documents to our documents. And as long as you do that on or in time, I should say, to be able to make those after-tax contributions by your business tax return deadline, including any timely filed extension in 2025, then you could still make those mega backdoor Roth contributions for 2025 here in 2026. And those limits are very high. So you can contribute 100%, dollar for dollar, of your self-employment income as a voluntary after-tax contribution for 2025, all the way up to $70,000. And that's per person. So for example, if it's two individuals, like a married couple that are both working in the same business, both participating in the solo 401k, if they each have at least $70,000 of 2025 earned self-employment income, then each person would be able to contribute the full 70 as an after-tax contribution. Now that assumes that they didn't make any other contributions to the plan for 2025, and they didn't make any contributions to a 403b, if any. They might be through, say, a day job. Now, on top of that, if they're age 50 plus, they can contribute even more because the 50 plus catch-up contribution limit is another $7,500, assuming they've got the self-employment income to justify it. Or instead of $7,500, you could contribute $11,250 as a super catch-up contribution if you were age 60 to 63 during 2025. So again, the process is a two-step process. First to the after-tax, then either to a Roth solo 401k or a Roth IRA. So just to paint the picture, to illustrate, let's assume you've got a 45-year-old solopreneur whose business is taxed as an S corp, and this individual receives $100,000 of W-2 wages from their business. So let's assume that they first make an employee Roth deferral of $23,500 for 2025. So 100% of their W-2 up to $23,500 as an employee Roth contribution. If they then upgraded their plan to our plan in time to make a voluntary after-tax contribution by their S Corp 2025 deadline, so March 16th or September 15th if they file a timely extension, and they didn't make any other contributions to the solo 401k, and again, no contributions to a 403b, they could make another $46,500 voluntary after-tax contribution for 2025, and then transfer those voluntary after-tax solo 401k funds over to their Roth solo 401k account. So at the end of the day, they would have contributed $70,000 for 2025, where those funds end up in a Roth account, where they've got that potential for tax-free growth, which is tremendous, right? 10 times what they could have contributed to a Roth IRA for 2025. And then on top of that, they're going to be able to access additional benefits, right? We talked about the tax credits, right? Our plan was the first solo 401k plan. We were the first solo 401k provider to offer a plan that supports the mega backdoor Roth. We're the first solo 401k provider to offer a plan that supports the tax credits. So those are $500 per year for 3 consecutive years. That's going to more than cover our fees for the first 7 years, right? So if you added up our fees for the first 7 years, it wouldn't even amount to $1,500. So we charge $650. That's the initial cost. That includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. Totally flat fee structure, right? Not based on the value of the account, not based on the solo 401k compliance support that's needed. So you know exactly what you're signing up for. In addition, our plan is going to allow for other features that are very popular with our client base. For example, you could borrow from the solo 401k. That's where you can literally withdraw funds from your solo 401k. You can use those funds for any purpose whatsoever, whether that's a business purpose or a personal purpose. That's not going to be subject to taxes or penalties, provided that it's documented as a solo 401k loan. We handle that for no additional charge. Customers of their advisors just have to request it in a timely fashion. So just request it. We'll prepare the loan documents within 1 business day. You also need to make sure that it's limited to those loan terms. So those loan terms are going to provide that you can borrow up to 50% of the balance, not to exceed $50,000. It needs to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest is either prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. And then in addition, investment freedom. So of course, our plan allows for typical brokerage type investments, whether that's stocks, bonds, mutual funds, ETFs. But in addition, our solo 401k customers are able to invest in true alternative investments. So our customers are invested in real estate, private equity, precious metals, crypto, just to name a few. And then the compliance support. So we provide the ongoing compliance support for the solo 401k. Now, what's needed is going to depend on what's going on with your plan. So everybody will need, for example, mandatory plan updates and amendments. And we proactively reach out to our client base when those updates or amendments are needed. Other things will depend, right? If you want to take a 401k loan, you got to request the loan documents. If the value of the plan exceeds $250,000, there's an informational filing return, which is called a Form 5500EZ. So customers or their advisors just have to let us know once the value exceeds $250,000. Then we'll add their plan to the queue to take them to that 5500EZ filing process, where we end up filing it via the electronic filing system, the EFAS system, to make it easy for all parties. In addition, the 1099R. So a 1099R, for example, is needed if you're making a mega backdoor Roth solo 401k contribution. So remember, when you make a mega backdoor Roth contribution, it's a two-step process. The first step, the voluntary after-tax solo 401k contribution, that doesn't need to be reported. It's certainly not reported by the plan. Contributions generally are not reported by the plan. But moreover, it's not even reported on your personal or your business tax return. It doesn't need to be reported on a W-2 if your business is taxed as an S Corp or a C Corp. But the second step, when you move the funds from the after-tax solo 401k account to either a Roth solo 401k or a Roth IRA, that second step, that transfer, is reportable on a 1099R. And we have forms on our website that clients or their advisors will submit that information. And as long as you do it in a timely fashion, we'll prepare the 1099R, and we'll do it for no additional charge. So if you have a solo 401k at Human Interest or somewhere else, you can still upgrade your plan and make those 2025 Mega Backdoor Roth solo 401k contributions. There is still time, but of course, it's going to make sense to act sooner rather than later, to give yourself plenty of time, for example, to determine how much you're going to contribute, et cetera, et cetera. Now, of course, we act very quickly. For example, we have a quick 1-minute application to capture the information we need to prepare the solo 401k documents. So we would prepare those documents within the same business day when you submit the application and payment is made. So again, we act very quickly. Okay, great. So thank you so much for bringing the good questions. Now let's turn to the questions. Again, if this information is helping you feel more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which helps others like you who might need this information find it, right? Other solopreneurs, other advisors. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. As mentioned, this is the second daily webinar of the day. So we go live on a daily basis. We're here every day with crucial content. All right. First question here. Can I ask a separate topic? Of course. Thank you for bringing the questions. Regarding letters received from State Cal Savers Retirement, it says something exemption for the corporate if the sponsor's retirement plan. Yes, a solo 401k is a retirement plan. Yes, it is. So that's going to help you satisfy that exemption. Good question. Am I eligible to make a 401k using the Secure Act 2.0? So I'm assuming you are referring to the fact that you're a sole proprietor and you had not set up a plan by the end of 2025, but now you want to set up a plan and still make 2025 solo 401k contributions, in other words, a new plan here in 2025? The answer is yes. So even if you didn't set up a plan in 2025, you can set up a solo 401k plan now here in 2026, and there's still time to set it up and make 2025 solo 401k contributions. Now, your options will depend on how your self-employed business is taxed. For example, if your business is taxed as a sole proprietorship could still set up a brand new plan in 2026 and make all types of contributions for 2025, as long as they set it up in time to make the employee contribution by April 15th of 2026, and then they can make the employer and or the voluntary after-tax contribution by either April 15th of 2026 or October 15th of 2026 if they file a timely extension for their self-employed business tax return. In other words, their 2025 1040. Now, if your business is not taxed as a sole proprietorship, let's say you're an S corp, it would be too late to set up a new plan in 2025 and make employee contributions for 2025, but there still would be time to set up a solo 401k in 2026 and make employer and or voluntary after-tax contributions for 2025, even if your business is not taxed as a sole prop. Let's say you're an S corp. So we definitely can accommodate that, most certainly. Great questions. We'll give it a moment to see if any more questions come across. We'll just also highlight our community. We have the largest community of solopreneurs, advisors, just interested parties around these topics. With over 32,000 members, we do have vibrant communities. There's a library of videos and webinars. So in other words, there's a ton of ways to learn and to share the knowledge. And it's totally free to join. All are welcome. It's not just limited to clients. So please don't hesitate to join at mysolo401k.net/my community. Okay, wonderful. It looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.